Welcome to IVSA Chart Analytics, your best signals stock market indicators. IVSA Chart Indicators is based on the time-proven Wyckoff-Williams volume spread analysis. It tells you when you should be in and when you should stay out. No more second guessing. It features a stock screener that allows you to follow the smart money. You virtually get in before the public does. Profit with the smart money. Simple, accurate, and available on desktop and mobile devices. Test drive our IVSA chart now.
Thank you, Studio B. Hello and welcome to the all-new stock review with me, Trishna Patel. We will be looking at stocks covered in corporate profile this past week, as well as stocks that are sure to pique your interest. And I have JC here from TradersTruthReview.com who will help you understand these stocks from a technical standpoint. So thank you, JC, for joining us today.
Thank you, Trishna. Hi, my name is JC from TradersTruthReview.com, and I'm happy here to review the corporate profile stock review that we were talking about recently. And the methodology that we'll be using will be from an IVSA chart standpoint, which is a study of price and volume, which is pioneered by the founder, Richard Wyckoff. It's a very interesting method.
So let's kick off with Chong Motors. Chong Motor Holdings Berhad is an importer of vehicles like Toyota and Nissan, and it is exposed to foreign exchange risks. So now, is the strengthening or weakening of the ringgit a short-term catalyst for share price?
Now, if you look at it, in a business like the automotive industry, similar to any export business, strengthening and weakening of the ringgit will affect. Of course, in this case, weakening ringgit will benefit Chong because some of the parts are actually imported. But Chong, being a local automotive, they're able to add and also minus of some of the product that goes into the car making. So on short, of course, given all things being equal, a weakened ringgit will be better.
So JC, what are the key points that investors should be looking at right now?
Now, the key point that investors should be looking is the trend of the market. From an IVSA standpoint, which is available from our site, ivsachart.com, you could see there were many strengths that's already built up around 5 ringgit 60 cents in here. But market could only break above the 50-day moving average, which is denoted by the gray line that you see in here. And subsequently, market still follow a downtrend. And finally, at $5 in there, right, 5 ringgit, you could see there were many strengths, merely that as a sign of strength, right? And the market moved higher only to allow more smart money to break. Now, going to the next chart that I have here, this is the so-called Bloomberg research. Now, back to early 2013, there were many buy recommendations at that time, as well as a lot of selling denoted by the so-called sell definition you see on the chart in here. Market did break up to 6 ringgit 50 cents. That is also coupled by a lot of good sales because of our growing economy that we see in Malaysia. But if you look further down somewhere in December to March 2014, a lot of sell recommendations were coming, a lot of analysts, and that subsequently pushed the price of Chong lower until we finally hit $5 in here. So now the question is, will analysts do a buy call here at 5 ringgit? If they do, likely the market will move back higher.
So JC, what can investors expect in the coming 3 months?
Now, looking from this chart that you see here, let me just go back one more chart. You could see there wasn't much movement in here. The support here is actually at 5 ringgit. Now, looking back at the percentage chart that we see in here, we are talking about probably a 10% movement in here. Now, trend is still down. So if you're looking to buy something good, look to buy one that is uptrend and not try to buy a falling knife.
So JC, now moving on to Nestle Malaysia Berhad. Nestle raised its prices for several products by 5 to 10% earlier this year in order to account for higher input costs. But with Nestle's products being non-discretionary in nature, do you think that the implementation of GST would affect its share price?
Now, like it or not, in any consumable discretion items like Nestle, which is a Milo, milk powder, these are things that people consume every day. Tax, GST, VAT, whatever you call it, is always been priced in. Now, in the case of this GST, Nestle are able to pass the cost on to the consumer. So it's not going to be much of an issue. Of course, initially they may take a bit of those GST, but eventually, if you look down the road in subsequent years to come, that cost will eventually pass on.
Now, KNM seems to think that there will be bulk buying in the 6 to 9 months prior to the GST coming into play. And this would create a short-term sales boost in the fourth quarter of 2014 to the first quarter of 2015. Now, JC, would you say that this would create a false sense of security for investors?
Now, that's a very interesting question here. Now, if you look back the last 3 months from an IVSA chart in here, now we are looking from a weekly basis standpoint, not so much on a daily. The market has always been hovering between 66 to 68 ringgit. Only in the last 3 months, we are seeing green arrow. Can you see the green arrow on the right side of the chart? That has been smart money operating, and they are been accumulating at this level. Now, going to the next chart that I have here is the percentage change. You could see there isn't much volatility in the market, just hovering between 0 to 3% return. So, meaning upside is not much.
Would this push for investor profit taking?
Now remember, Nestle is an income generation stock. It's not one of those speculative stock in nature. Investor who buy this must know that if the income producing country like Malaysia is growing, then Nestle will tend to do well. So going forward, if you can see in here, the price movement is only between 0 to 3%. Don't expect too much from an income producing stock like Nestle.
We also looked into KNM Group Berhad, and looking at the price chart from the past few years, we can see that KNM began its bottoming phase from mid-2011. Would you say that the upside breakout of 60 cents horizontal line in early 2014 signals the start of a price recovery?
Trishna, I don't have the chart here that goes back as far back as 2011. What I have here is the last 6 months. But if you notice, going back at the 2011 chart, you have the breakdown of 60 cents. There was a buy recommendation at that time that subsequently moved out, and that is probably due to the company making a better earnings going forward. So right now, the last 6 months, this chart that we have, the market continued to improve. Now, if you go back as early as March 2014, there were a lot of green arrows showing up on the right side of the screen in here. Okay, but at the same time, there were also red arrows which show signs of weakness. But what is important is the trend. At many times in the IVSA chart, weakness will appear. But if the market doesn't go down, that means smart money operators are in control. And you could see there were lots of strength denoted in around 80 cents, somewhere in June 2014. See the green arrow, and market subsequently break to 1 ringgit and 5 cents. But we have formed a double top at 1 ringgit 10 cents in here, and then all the sign of weakness came in. And at this junction, if I say the market can hold at 1 ringgit for KNM, then we will see another beginning of accumulation.
KNM was chosen by Sinopec Engineering to be its subcontractor for the Petronas Rapid Package 2 job. Now, KNM's portion is worth around 280 million US dollar. Maybank IB believes that KNM could secure projects up to 1 billion US dollar from the rapid projects alone over the course of the next 3 years. Now, would you say that this would be a good time to pick up on KNM shares?
Really? Now, public need to aware on good news, most of these things are being priced in. So subsequently, news that is mentioned out now is already been known by many people. So that's why if you go back to the IVSA chart, you could see sign of weakness are coming. It means profit taking. In order for this chart to move forward, right, you need to see more sign of strength, which means want to see more green arrow appearing on the right side of the chart. That is the only way where investor or trader can profit from a IVSA standpoint using price and volume to make the right decision.
Now, would the news flow of job wins trigger profit taking?
Now, that is certainly true. At this point, news flow like those good news will subsequently make this stock jump higher. But remember, as long as the price is higher, smart money will also take profit into.
Now, we didn't look at this stock in corporate profile, but just out of curiosity, let's look at Sumatec Resources Berhad. Last Thursday, Bursa Malaysia issued an unusual market activity query on the oil and gas firm over the unusual surge in the company's share volume. Now, would this give investors a cause for concern?
Yes, now, like it or not, a lot of time when stocks surge up, it is partly due to big names being in the industry. No need to mention the names in there, you can look it up. But looking from the IVSA standpoint chart, the best time to be buying, of course, on hindsight, will somewhere be in June or July when we see lots of accumulation in there. And once the accumulation is in there, smart money will campaign a price movement with inducing some big names into it. And subsequently, we can see this move up higher to August. And remember, then the market got a bit climatic at the top, around 58 cents and 60 cents, and you know what happened after that, right?
Okay, so JC, what would normally create a surge?
Now, a lot of this time, this surge are again caused by smart money that we talk about in here. But the big sell-off that we see down in here is also can be caused by another bad news. So that's why the market is fall back to the 44 cents.
So should investors wait out this surge before investing?
Now, this is a very tough call because there is a lot of volatility in this market here, right? If retail investors who have a very small capital, they should wait out and try to buy when there are more green arrow, meaning sign of strength. That will be around the 46 and 44 cents. Perhaps have a very tight stop because this market can move and jot out a lot of the small average retailer with weak hands.
It was reported that interest in Sumatec shares was fueled by market talk that the company would be uplifted from its practice note 17 or PN17 status after penciling profit for 2 consecutive quarters. Now, JC, how would this affect share prices?
Now, like it or not, this is only 2 consecutive quarter. So we have to see how the chart pan out. Because remember, chart is always correct because it tells the truth. But the news is always flowing in and out. Typically, we want to see a more stabilization in the price chart in here, perhaps holding a good support at 46 to 48 cents. That is why I said earlier, we want to see sign of strength coming in here before accumulation.
Now, here's another stock that I picked out, AMMB Holdings Berhad. AMMB is expecting some challenging times ahead despite posting revenue for the first quarter of financial year 15. The bank is anticipating challenges in the form of consolidations in the banking industry, intensifying competition and rising compliance requirements. Now, how has AMMB been doing this past 18 months?
Now again, going back to the Bloomberg research chart that I show you here, if you go back as far back as December 2012, banks really hasn't been doing so well, partly because of the interest rate regime they've been priced in here. But at the same time, in March 2013, there were a lot of buy calls happening that subsequently pushed up the price to almost 8 ringgit for AMMB. I think if investors remember, there were a couple of news of merger and AMMB was in and out. So that tends to move the price a bit more. At the same time, from September 2013, you can see from the Bloomberg research chart, there were a lot of buy calls. At the same time, there was still some hold calls in here, but AMMB couldn't move up. Instead, just lingering between 7 ringgit 50 cents to 7 ringgit. Looking from the IVSA chart that we have for the last 6 months, we could see sign of strength really coming in, denoted by these green arrow holding above 7 ringgit. However, each time this market tried to break above to 7 ringgit 35 cents, 7.30 cents, sellers came in, the strong hand came in and began to sell off, but they eventually buy back between $7 too. And finally, the last 2 days, market broke again to 7 ringgit to 69 cents. Now this is what we call a triple bottom. It is very important now that AMMB do not break below the 6 ringgit 90 cents, else we'll probably see a downtrend AMMB in the shorter, medium to long term.
Would you say that AMMB is well geared for competition in the industry, especially now with CIMB merger talks?
Now, like it or not, eventually AMMB has to compete in this very intense competition. Now, the recent news of AMMB selling is M. Fraser broking to Taiwan brokerage. So that also tells you a news that perhaps AMMB may not be interested to expand, rather focus in locally, and that is probably the strategy they would have to think about and probably draw another one to see how they want to compete in the really intense competition, especially in the finance and banking industry.
Thanks, JC, for the insights. Now, last week you picked Global Oriental Berhad as the hot stock for the week. Anything new since then?
Yes, if you see from the right side of the chart, last week when I picked it was because of the sign of strength that came in around 1 ringgit to 105. There were about, let me see, that's this 6 sign of strength in here. Market broke to 115. That is very, very positive. That's typically from an IVSA chart, we call it the line change. But last week, the market made a new high around 115, but pulled back. But what's very important, if you notice on the right side of the chart, the pullback is on relative low volume and still supported at 105. So that is probably a pullback on lighter volume, and who knows, smart money will come in and buy again.
So JC, while I have you here, any hot stocks for the week?
Yes, for our this week pick, I really like Latitude 3, which is actually a home furnishing. Now this company has a very relatively low PE, between 4 to 5 times, and it does pay a 2.1% dividend. The return on equity is about 11%, not too bad for a company. But again, looking at the IVSA chart, why I picked this, you can see beginning of early August, it was still doing around 3 ringgit and lots of sign of strength holding. So who knows? Someone know ahead begin to buy in, and if not mistaken, there will be coming good news, perhaps a good quarter or some joint venture that is coming in, and that's why we see this Latitude 3 begin to break into 3 ringgit and 40 cents. Next week, we will come back and review this again.
Thank you, JC, for taking the time to answer the questions. That's all the time we have for today, but be sure to tune in for more stock tips next week. Have a good trading week. Back to you, Studio B.